Hey everyone, welcome back to the ThinkorSwim tutorial series. In today's video, we're going to go through the process of placing options trades based on the underlying stock price on the ThinkorSwim mobile app. Now this could be a little bit complicated, so we're going to go through several different examples, both for simple single leg transactions as well as more advanced bracket orders. Think of stuff like OCO bracket orders or first trigger sequence, that kind of stuff. Now, for the most part, I mostly get asked this question because people want to place stops on options based off the stock price rather than based off the option price. So think of it like you have a Micron call option. Micron's currently trading for 97 bucks, and let's say that call is currently worth like 2 or 3 bucks. Instead of you saying when that option price drops below, let's say a buck, you instead only want to sell that contract if Micron, the stock price, goes below 90 bucks a share. Now to do that in this app, it's actually fairly easy, and that's what we're going to cover first. So since I've been using Micron as an example, let's go ahead and click on that in my watch list here. And like I said before, if we look in the upper left-hand corner, you can see the stock price is currently $97.36 a share. Now from this screen, we've got an option chain pulled up, and I actually don't have any long options on Micron that I could use as an example. So let's just pretend for a second. Let's scroll down, and right now I've got the 18 March expiration pulled up. Let's scroll down here. And just for the sake of this example, let's pretend I've got the 105 call option. If you look to the left there, you can see it's currently trading for $3.15 by $3.30. Now, since I'm pretending I already hold it, I want to put a stop on it to close me out if Micron drops below 90 bucks a share. So since I already hold it, we're going to go ahead and click on the bid price to create an order ticket to sell the option. In the upper left-hand corner, you can see I did click on it and it says I'm about to sell, or I've got -1 contract of the 105 calls. From there, I'm going to go ahead and click on Next. And if you're familiar with the app already, this should look pretty familiar too. It's just the order ticket that you normally see. Now, up at the top is the standard questions you normally get asked. What type of order do you want to use? How many contracts do you want to sell? What price do you want to sell it at? But what you're probably not familiar with is the conditions button down towards the bottom, or kind of in the middle-ish of my screen here. This is where we're going to actually set the condition based off the stock price. So we're going to go ahead and click on that little arrow to the left of it. From there, if I scroll down, you can see submit conditions, submit out a custom time, submit on a current market condition, or cancel based off certain conditions being met. Now, in my case, in this example, we're basing it off of a market condition. We're basing it off of the stock price for Micron. So what I'm going to do is go ahead and click on that little toggle to the right of it. As soon as I do that, it opens up the add condition button, and I'm going to click that little plus sign to add a condition. From there, you can see the symbol that it uses by default is the symbol that we're looking at, because that makes the most sense, right? Right now, we're basing it off of Micron stock. We're going to keep the method as the mark price for Micron stock. And right below that is the trigger. Currently, it says at or below, but you could also flip that over to at or above. And in our case, we're saying we only want to submit this order if Micron the stock drops below 90 bucks a share. So go ahead and throw 90 in there and hit done. Now that takes care of about half of what we're going to do here. So again, we're saying we do not want to submit the above order until Micron the stock drops below 90 bucks a share. But again, this isn't quite perfect yet, so we're going to go ahead and scroll up here at the top. And remember, this upper order portion right here, this is what's actually going to be submitted once Micron drops below 90 bucks. So looking at it, we can tell that this doesn't make a whole lot of sense quite yet. Some of you guys might have already noticed the problem with this. We don't know what the option is going to be trading for when Micron drops below 90 bucks. This contract could be trading for 3 bucks still, could be trading for 2 bucks, could be trading for 50 cents for all we know. So we can't necessarily put a price on this contract because we don't know what it'll actually be trading for at that time. But we also don't necessarily want to put a market order on there because we have no idea what that thing could fill at. If the liquidity dries up and the bid goes down to 1 penny, even though that's not a fair price, if we left it as a market order, we could get filled at a penny on this thing. So since I want to be better safe than sorry, I'm actually going to leave it as a limit order. But what I'm actually going to do is click on this little man box on the far left-hand side. Now, once you do that, a little menu pops up. So saying manual, last, bid, ask bid, mark, and average price. Now, for this example, we're not going to get into everything that you can do with this. We're just going to click on the mark price. Now, by default, you can see it goes in as -10 cents. I'm just going to go ahead and click on that and make it back to 0 by default. Now, what I'm essentially saying with this order is, as soon as Micron the stock drops below 90 bucks a share, I want to put out a limit order to sell this contract. But since I don't know what the price of this contract will be when that condition is met, go ahead and put that limit price in at whatever the current mid price is at that time. So let's say in this example, a week from now, Micron drops down to 90 bucks a share. And at that time, this contract is trading for $1 by $1.10. My limit order would then go in at $1.05. right in between the bid and the ask at the time this condition is met. Now, the last thing I'm going to do is actually change the time in force from a day order to a good until canceled order. So if it doesn't happen today, try again tomorrow. Doesn't happen tomorrow, try again the next day. Basically, always protect me. If Micron ever drops below 90 bucks a share, I want to be protected to the downside. Now, again, this is not going to be perfect. There's always risk that you could not get filled on this trade because, again, who knows what the bid price is going to be at the time this triggers? Who knows if somebody's going to take you up on the mark price? But for me personally, this is the best way to go about it if I'm going to be basing my stop off the stock price. Now, if I was happy with this, everything looks good, and it does to me, I would just hit review in the upper right-hand corner. And then if I actually wanted to send it, just hit send in the upper right. Now, I know that was a lot, so don't worry. We're going to go through several different examples, but we're going to go ahead and edit out of this and cancel it here. Now, as for the second example, we're going to create an OCO bracket order. So let's get out of Micron. We've used that one already. Let's go ahead and go to Activision, ATVI. In this example, I want to buy a call option, let's say. So let's scroll down, and we'll still use the 18 March as an example. Let's say I want to buy the $70 call option, and we can see the $70 call is currently going for 243 by 257. Let's say I wanted to buy that thing if it ever dropped down to 250. So we'll go ahead and click on the current asking price, 257, hit next in the upper right. Let's say I only wanted to buy that at 250, I think is what I said. So we'll go ahead and drop this down to 250. I'm going to switch it over to a good until cancel order. And from here, to create an advance order or an OCO bracket order, I'm going to go ahead and scroll down, and you'll see create advance order towards the bottom there. As soon as I click on that, you can see it takes me to the advance order group window. Up at the top being the opening trade, the one we just created to buy that contract if it ever drops down to 250. Once that order fills, it's then going to trigger these next two orders we're about to build. Now, as for the first one, that's going to be our profit-taking order. So let's go ahead and click on the Add Order button. Now, for a profit-taking order, I would usually base that off of the option price, saying, hey, I bought it for $250. I want to sell it for, let's say, 100% profit, which means I want to sell this thing for $5 per contract. But since the whole point of this video is to get in the habit of using the stock price as a condition, or at least get familiar with it, we're going to base off the stock price. So let's say we only want to sell this contract if Activision pops above $75 a share. So let's go ahead and click on that order ticket again. From there, we're going to start with the condition first. So come on down to conditions. We'll go ahead and click on that. We're going to scroll down and click on the submit on market condition, a little button on the right. From there, we're going to add a condition. Just like before, it fills in the symbol by default. So in this case, we will use Activision, the stock, as the condition. We're going to leave the method set as mark, but this time we're going to say at or above. So we'll go ahead and click on that little arrow. And if I remember correctly, I said the threshold was going to be $75 a share. So we'll go ahead and type that in and hit done. So again, what I'm saying with this condition is I only want the above order to be sent out if the stock price for Activision goes above $75 a share. Now that I got the condition out of the way, we'll scroll back up to the top, and we've got some work to do with the information up here. Now, just like in the previous example, I have no idea what this contract is going to be trading for when Activision hits $75 a share. Now, since I don't know that, I'm actually not going to put in a manual price myself. I'm not going to put in $3.50. I'm instead going to base my limit order off of whatever this contract is trading for at the time the condition is met. So I'm going to go ahead and click on the word manual on the left-hand side again. And just like before, I'm going to link it to the mark price. And just like before, you can see it defaults to a negative 10 cent offset. So we'll go ahead and pop that back up to 0. And again, what this is saying is once Activision goes above $75 a share, I want to put out a limit order to sell this thing. But I want that limit order to go in at whatever the midpoint is at the time this order goes out there. So let's say when this condition is met, the option is trading for $10 by $11. So a pretty wide bid-ask spread. Our limit order would then go in at $10.50, right in between the bid and the ask. And that's entirely because I put a $0 offset in there. If I were to drop this down, let's say I went back to negative 10 cents again. What I'm now saying is, if that bid ask is 10 by 11, the midpoint would be $10.50, so I want to go in 10 cents behind that, so $10.40. Now, in the case of a long option, the more I go closer to the bid, the more likely it is that I will get a fill, right? Because that means my order is more competitive. If I were to change this to, let's say, a positive number, that means I'm raising it from the mid, making my order less likely to get filled because I'm getting less competitive. But you guys can do whatever you'd like. I generally just put a $0 offset if I'm going to do this, but again, you can do whatever feels most comfortable. Now we'll go ahead and flip that just back to 0 just for this example, and we're going to go back to the group because we've got everything filled out just the way that we like it. And actually, if I look up at the top there, it says the order triggered by GTC must be a GTC as well. So it looks like I forgot to flip this over to good until canceled. So let me go ahead and fix that and now go back to the group. So as of right now, what this is saying, what I'm looking at is I'm first saying I want to buy this contract, right? I want to buy this contract if I can ever get it for $250 or better. Now, if this order ever fills, I want to automatically put out an order to close that contract. But I only want to close that contract if Activision, the stock price, crosses above $75 a share. So as of right now, I've got the profit taking order in, but remember, we needed to put a stop order in along with this. So we're going to go ahead and add another order to the right-hand side. I'm going to go ahead and click on that right-hand side order. Just like before, I'm going to start with the conditions button first. So we'll go ahead and click on that. We'll go ahead and click on the submit on market condition button, just like always, and we're going to add another condition. From there, we can see the symbol is automatically filled in as Activision. We still have the method mark. We still have the trigger set as at or below, and that's what we want it to be because now we're going to say if Activision ever drops below, let's say $60 a share, I want to close this thing. So we're going to go ahead and click in that threshold box and change it to $60 and hit done. So what I'm basically saying is I want to get stopped out of this long call option if Activision ever drops below $60. So I got that taken care of. Now let's scroll back up to the top and get this knocked out. Now, despite this acting as a stop, we're actually going to leave the order type as limit up there. But as I've mentioned 100 times already, we have no idea what this option is going to be trading for at the time our condition is met. So instead of us putting in a specific price, like right now I've got $3.50 in there, we're going to go ahead and click on manual again. We're going to come down to the mark and click on that. We're going to change the offset to $0, just like I've been using. And we're going to change the time enforced from a day order to a good until cancel order. So just to rehash it again for like the third time, what I'm saying is I want to close out of this long call option if Activision, the stock, ever drops below $60 a share. Whatever the price of this contract is at that time, that's basically what I want to sell the contract for. So instead of using a market order, I'm still using a limit order, but I'm basing that order off of whatever the midpoint is at the time the condition is met. That was a mouthful, but we're going to go back to the group in the upper left, and now we can see our order built out. The opening order to buy the contracts, followed by our take profit and stop loss order, or a first triggers OCO bracket order. If I actually wanted to submit this, we would hit review in the upper right, we'd make sure everything looks right, and then we'd hit send in the upper right hand corner. Now that was a lot, but we're going to actually do one more before we end it. So let's go ahead and edit out of this, cancel it, and cancel one more time. And let's go ahead and use a short option as an example. So I've already got Activision pulled up, so we'll continue to use this. But let's say I was neutral to bullish on Activision. I thought it was going to stay above $55 a share. So since I'm neutral to bullish, I'm going to be selling a put option. And since I think it's going to stay above 55, we'll look at the $55 puts. Right there, we can see it's trading for $1.06 by $1.18. Since I want to sell that put option because I want to go short the option, we're going to go ahead and click on the bid price. From there, you can see I'm about to sell that 55 put in the upper left, and we'll go ahead and hit next. Now, generally, you're going to build the opening trade just like normal. I only want to sell this contract if I can get, let's say, $1.12 or better, and I want it good until canceled. I'm not going to set any conditions because, again, this is just the opening trade to actually get into the option. From there, I'm going to scroll down and I'm going to create an advanced order here. And what I'm going to say for this one is I want to buy it back if it's ever trading for 5 cents or lower, which means I'm basically taking max profit on the trade. So we're going to add an order here. We're going to go ahead and click on that order. I'm not going to use any conditions, so I'm not basing this one off the stock price. I'm just going to set it as 5 cents or better. I'm going to make the order ticket good until canceled. And I'm going to go back to the group. So again, so far I have not based any of these orders off of the underlying stock price. It's just based off the option right now. Saying first off, I want to sell it for $1.12. If that fills, I want to then try and buy it back for 5 cents, taking near max profit. Now the next one is going to be the stop loss order, or is going to act like a stop loss order. And this one I am going to use the stock price as a condition. So we're going to go ahead and click on add order on the right hand side. We're going to go ahead and click on that new order ticket right there. Just like in the previous examples, we're going to add the condition first, so we'll go ahead and click on conditions. We're going to go ahead and submit on a market condition, just like before, and we're going to add a condition. Now remember, since I sold the put option, I'm actually bullish on the underlying stock. I want Activision to either stay at its current price or go up. So Activision going down is going to hurt me. So let's say if I start to get tested on this short put, I want to buy it back. And if I get tested, let's say it goes down to $56. So we'll go ahead and type in the threshold here, 56, and hit done. So I'm basically just saying if I get anywhere near my short put strike, so I sold the $55 strike, if it gets near that at 56, go ahead and buy it back. Now that we got that out of the way, we need to scroll up and fix this part because we don't want to use the manual price just like before. We want to click on that and flip it over to the mark. As before, I'm going to flip this back to a $0 offset and leave it set as a limit price. The only thing I need to flip is make it good until canceled. Going back to the group, we can see all 3 order tickets now. So starting up there at the top, I'm saying I want to sell this contract for $1.12 or more. If that order fills, then I want to try and buy it back for 5 cents or less, or get stopped out if the stock price ever drops below 56 bucks a share. Now, if I actually wanted to submit this first trigger's OCO bracket order, I would simply hit review in the upper right-hand corner and send the order ticket out there. Now, I know that was a lot and it's a little bit complicated, so you guys might need to watch this video over again, but that is really everything you guys are going to need to know to place options trades based off the stock price on the mobile app. It still isn't perfect and it doesn't have all of the features of the desktop platform, but it's close enough. If I did miss anything or you guys have any additional questions, please let me know down below. But that wraps things up for today's video. I hope you guys all have an amazing rest of your week and I'll see you all in the next video.